Hey everyone, thanks for joining us for the virtual tax school webinar. My name is Alec Leo and I'm a marketing specialist with TaxWise. And before we get started today, I want to let everyone know that we typically host at least one virtual tax school webinar a month. So please join us in the future if you find the session to be informative. Also during this webinar, you'll be able to submit questions to the team and get those answered live at the end of the webinar, time permitting. The topic that we will be covering today is mastering the 1040 tax return. And with that said, I'm very pleased to introduce our speaker for today, Mr. Ryan Hubbs. Ryan is a solution architect with TaxWise and Wolters Kluwer and has a decade of experience working in tax and accounting. So with that said, the floor is yours, Ryan. Take it away.
Absolutely. And one thing I think we need to do before I really get started is, could you make me a panelist or a presenter so I can share my screen and actually show my PowerPoint and the various tax software items I'll be going over? Thank you very much.
Definitely.
So let me go ahead and share my screen. Yeah, it helps, right? And just to give a quick background on myself, my name is Ryan Hubbs, and I'm a solution architect here at Wolters Kluwer, which is a really fancy way of saying I'm a product specialist. But I do have my background in accounting. It's what I went to school for, and I host one of these virtual tax schools every single month. And today we're going to be going over mastering the 1040. And throughout this presentation, what I try to do with these presentations is give some easy information for maybe someone who is newer, then kind of an intermediate step, and then lastly end on a more advanced topic. We're going to try to continue that flow during today's presentation and go through those three core items, and specifically what our objectives are going to be today is, well, identifying who files a 1040. We're going to look at how to report the financial information on the 1040. We'll also talk about what exactly it is. I think most people here probably know what a 1040 is, but maybe you are newer or you are just getting started out. One of the things that I found very almost confusing when I first got started is, there's a 1040 and a 1065 and 1120, and there's two 1120s and 941s, and like the list of the numbers just goes on and on and on. So we will be going over, especially when it comes to the Schedule C, like when is this a business return? When should this be included on the personal return on the 1040? We'll be going over some of those examples. We're also going to talk about the standard and itemized deduction. I know for newer preparers, this can kind of be a hang up on which one is going to be most beneficial. And one of the nice things about this is it's really cut and dry with the IRS, especially when it comes to the standard deduction, where you will be able to almost eyeball your client's financial expenses and know almost off the top of your head, might be close where you want to bust out a calculator, but we'll be kind of go over when it's going to be more advantageous to use each method between standard and itemized. Once you kind of get a hang of it, it's really, really easy. Going to be my job to try to present this and make it look as easy as possible today. And then we're going to look at tools to help you complete a 1040 tax return. We're going to have quite a few different tools within our tax software that we'll be using today. And we're actually going to go through kind of step by step, completing a 1040 with some kind of basic to intermediate level items within it. And we'll be using that using our tax preparation software called TaxWise. And we'll actually be going through and filling out the various worksheets and seeing how it calculates the form 1040. Now, before we get started into really the meat of this presentation, this is the question that I ask always at the very beginning of each one of these virtual tax schools. And it's going to be, how many tax seasons have you participated in? And why I like to ask this is for two reasons, really. One, it's to tailor the content when I'm actually creating these slides and PowerPoints and topics. If we see we have a lot of 5+ years people, we want to have more advanced topics. If we see a lot of people that are this will be my first tax season, well, then we want to kind of stick with more of the basics. It's also going to help me on the fly here. If we see that we have a lot of new preparers, I will go a little bit slower and go through some of the more basic items. Whereas if we see we have a lot of long-term preparers here, it'll let me know maybe I don't have to go over how to navigate tax software, and we can really just focus on the ins and outs of what I have prepared today. So whether it's your first season or you've been doing this for 20, 30 years, just let us know. Based off the 4 options here, and this will be a very big help to me moving forward with these different virtual tax schools. Give you all a little bit of time here, but then once we get past this question, we will be going into the meat of this presentation and the specific items I have prepared today.
Just give everyone a few more seconds and we will close the poll.
Absolutely.
All right, let's go ahead and close. And we can share here. So it
Okay,
looks like we got a pretty heavy split here. We got a lot of people who are new and a lot of people who are experienced, a little bit in between.
Okay, so really good breakdown. And I think, the way I have this set up, hopefully everybody will be able to take some knowledge away from this. And with those results being in, let's go ahead and get into the presentation. And we will be starting off with the basics, identifying who files a 1040. And what the 1040 is it's really just the form that the IRS requires individuals to file in order to report their personal income. And individuals can be kind of a tricky word because you can have more than one person on a 1040, which is really going to be designated by the filing status. So like if I were to file my 1040, it would put me as single, and I would be the only person that's on that 1040. But if you have someone who's married or the head of household, maybe there's some dependents, even though it's an individual return, it's very, very common to have 2, 3, 4, 5, really depending on how many dependents they have. You can have a lot of different people on this return. And the specific items that the IRS really want to know is income is definitely number one on their list. There will be an expenses section to get your taxes down, but the main thing is always to report the income. And that could be different various types like wages, interest, investments. Even gambling income is something that the IRS wants to know about if it really meets a high enough threshold. And these small businesses may be reported on the Schedule C of the 1040. There's going to be some things that if you have a new client and they have a business that you'll want to ask them, are they a sole proprietor? Are they a partnership? Are they an LLC? If so, is it single member? Because the two types of entities that are reported on the Schedule C are going to be sole proprietorships. And then if it's a single member LLC, that may also go. It may also go on the Form 1120. There's some questions that you can ask to really figure that out. But it's not uncommon to have small businesses, sole, just one person working in the company. Maybe they're not incorporated, they haven't set themselves up as a partnership. Well, that even though that's the individual return, that information is going to go on the 1040 tax return. And a question that I always like to ask on these is, if I find $20 on the ground, am I supposed to report this to the IRS? And the answer to that is going to be yes. Technically, you are supposed to. And why I like to include this question is to really just highlight that in the IRS's eyes, they want a very comprehensive tax return with every little bit of information being reported, whether it's going to change the amount that the IRS gets or it's not going to change the amount. Even if it would seem immaterial or miscellaneous to you, the IRS still wants it for their own record keeping. So it's a good mindset as a tax preparer that as you're getting all of this information from your clients, you are going to be reporting as much as you possibly can to the IRS, even if you don't think it's going to make or literally won't make a difference in their taxable income or what their refund is or amount due. It's always good to get in that mindset of reporting as much as you can to the IRS. Now, with going through who's going to be filing a 1040, let's talk about how we're going to prepare a 1040. And today we're going to be using a tax preparation software called TaxWise. And this is going to be a browser-based solution, and I've gone and created a mostly blank return. You're going to see that there is a little bit of information you can see for the name. I put it Mastering 1040 just to kind of match this class, and so I could easily recall which one to load up when it came time to present this today. And since we do have a big mix of people that are brand new, maybe this is their first look at a tax software, just to very briefly go over the basics. How you're going to navigate, as you can see right now, we're looking at a main information worksheet. We're going to get into this in just a second, but I can scroll down and you can see that this is primarily for basic taxpayer information. But we're also going to have a tree here on the left-hand side. And you can see we're on the main information section, but if I actually wanted to show off the 1040 page 1, I can just go click 1040 page 1, and we can see the form basically as you would if you were to print it out from the IRS website itself. Now, I'm going to go through a lot of the basic items on a tax return today. We're going to talk about W-2s, 1099s, a lot of different 1099s. And we'll jump into some of the schedules that you're going to commonly see, really A, B, C, and D. E is also a very applicable schedule that you might see. It's for rental income. I typically host a presentation just on the Schedule E, which is on YouTube if you want to view that. So I've left the Schedule E off of there. We'll be going through A through D today and just kind of going through and filling out the basics of a tax return that's going to have the items that you're most commonly going to be seeing. And And but before we get into really reporting the financial information, the first step of completing a tax return is really going to be filling out this main information worksheet. And what is going to be on this main information worksheet is basic taxpayer information. You can see that there is a section for their first and last name, as well as their social security number. If they have a spouse, then they will be filing jointly. You would enter in the spouse's information here. And as we go down this list, you can see, okay, we have mailing address, birth dates. If we continue to scroll down, some of the basic taxpayer information that you need to fill out. And one of the benefits and one of the tools that's really helpful within TaxWise is you're going to see there's a lot of red underlines under some of these items, and then under other items, there is no red underline. Well, anywhere where there's a red underline, this is going to be something we call get the red out. And this is going to be an area that must be filled out in order for this return to be accepted by the IRS. It's not all inclusive. There may be reasons why information is incorrect that could cause a return to be rejected. But if you get these red items out, you're going to know that your return is in a very reliable state where there is a high probability of it getting accepted by the IRS. It's not going to be rejected. You're always going to know what are the critical fields that need to be done. Now, let's go ahead and scroll up, and I'm not going to go through the entire main information worksheet as it can take, 5, 10, 15 minutes to prepare, but let's go through some of the basics. Let's go ahead and enter in an address. We'll go ahead and enter in a zip code. I'm going to enter in the zip code. You can see the city and state autofill. You're not going to have to retype in this information every time. Go put in a birth date. And as we're going through, you're seeing that the red underlines are being removed. Just letting you know as you get an item completed, that red underline is going to go away. You can move on to the next field. Now, as I continue to scroll down, we're going to select a filing status here. You can see multiple red underlines going away at the same time. But what's nice about this area is as you fill this information out, any subsequent forms that you actually go and have to complete, information like their name, their address, it's going to automatically flow through to those various worksheets, really minimizing the amount of typing that you have to do over and over again. And it's really going to eliminate the potential for typing in something wrong, typing in a name wrong or a birthday wrong. Once you get it in once correctly, it's going to flow through to everywhere else in the tax return. And once we fill out information, just to kind of visualize this, let's actually go to the Form 1040. Well, this is the form that's going to be printed, and really what the IRS is going to review most heavily is the actual US 1040 tax return. And you can see the information that I previously entered on the main information worksheet. It is going to flow through into the Form 1040. You can see I already have the name, but we went ahead and added in the address as well, and here it is. You just click through these boxes. So everywhere that it's possible, it is going to flow through. And what's nice about the underlining system here is anywhere where we've been looking at the red underlines, but we also can see we have green. And green is just going to mean this information is pulling from somewhere else in the tax return. And if we want to go and view where that is going to be pulling from, well, we just have to click on this little caret next to the name. You can see there's a little chain link item right here. If we click on that, it's going to say, okay, this is pulling from the main information worksheet. If I go and click on this, look, it's bringing us right back to where we have to actually go and enter the information for it to populate the tax return for us. Now, let's go ahead and go back into PowerPoint right now. And I want to go through some of the more basic forms that you're going to constantly be seeing over and over again. And I've gone ahead and got a sample W-2. This is not a real W-2. This is a sample that we like to show off on these presentations. And we're actually going to go into the tax software and enter in this information. But before we go and do that, what's really important to know, we'll actually just go over what a W-2 is. If you've ever had a job and you are an employee of a company, you are going to receive a W-2, and it's going to state a few things. Most importantly, it's going to state your wages. How much were you paid throughout the year? But it's also going to report the federal income taxes that may have been withheld, almost that usually is withheld, any Medicare taxes, as well as any state taxes that may have been withheld as well. And this is probably the most common form that's on a 1040 as far as what worksheets are going to be added, as by and large, the vast majority of people are going to be W-2 employees. I am personally a W-2 employee of Wolters Kluwer. I get one of these every year, just stating my income. So how we're going to report this within the tax software is, let me go back into TaxWise. And I actually have a W-2 section, I believe, Looks like I may not have added. Let me go ahead and click on my add button here to add in the W-2. Just going to go ahead and type it in, and there's a wages and tax statement. We're going to go ahead and click on this. And when we first click on this, you're going to see a lot of the employee information kind of flow through from that main information worksheet. So you're not having to retype it in. But let us go ahead and check this box, get some of the red out, and let's go through how we're actually going to enter in this information. Now, on our sample, they were working for the Burger Hut, so we're just literally going to type this in and hard key it in. We can go back and we'll go see what the address is. It's in Rome, Georgia on Shorter Avenue. So I put 12 Shorter Avenue. And then I'm just going to go to the zip code, which is what, 30165. Type in the 30165. You can see Rome, Georgia automatically populating. And once you've set up the payer, as far as typing in these different boxes, getting the city, state, zip, all that information, it's going to be set up within the tax software where you're really just matching the boxes. And you can see that each one of these boxes is numbered. We have 1, 2, 3, 4, 5, 6, etc. And if we go back into our PowerPoint, look, it's going to be numbered in the same exact format as the Form W-2. So you're really just looking at the financial information and then typing it into the specific boxes. So let me go ahead here and we will go back into the tax software and we're going to go enter in some wages. And I believe it was 17,421. And when we do this, an important thing has happened. We actually can see that there's a refund calculator within the tax software. And we can see that there's a federal balance due of just under $450. And if we were to go back and just to highlight this one more time, I'm going to zero out the wages. And when there's no income, you can see there's no federal refund, right? Or there's no amount due. But if we go back and enter in the wages, 17,421, here's our amount due. If we go and enter in the withholdings, which looks like we have 1806 in withholdings, we now have a refunded amount. And there's also a few other things that are automatically happening based off the wages and taxes withheld. For Social Security, whether it's the Social Security wages or it's the Social Security taxes withheld, and same thing with Medicare, this is typically just a mathematical calculation based off the wages. And it's going to automatically populate what that calculation should be. Now, there may be specific reasons why what they withheld is different. It's kind of a little bit more rare for that to happen, but you could always go in and type in these boxes and change the withholdings if for some reason there was an error or some unforeseen reason that they had more taxes withheld. You could always change that, but as far as what's actually going to be due, the amount due, it's always going to be calculated off the wages at a certain percentage, and it's going to automatically populate this for you. When it comes down to it, really filling out this form is just entering in the employer, putting in the wages, putting in the holdings, and most of this should be done for you. Now, there are going to be a couple other sections that I briefly want to go over. And in order to get to these sections, I'm just scrolling down on my mouse, and you can see that they're getting to some more advanced areas. And you can see the boxes are still numbered. So we have a box 12, 14, 13, 15. And if we actually go back into our W-2, even though it's blank in these boxes, you can still see that it's really just mixing and matching boxes. Now, excuse me, the most common box is probably going to be the state withholdings that they had, and we could put in the state of Georgia. We could put in an ID number. I'm going to leave this blank just for the time being, but you can see when I put in the state of Georgia, the state wages automatically populating. And typically, unless they're traveling a lot across state lines, if they just have one state of income, it's typically going to match what the total wages was. State tax, if we go back into our W-2, we can see there's income tax of 1124. We can go ahead and add that in. And this isn't going to change the outlook on the federal refund, but what it is going to do is any state forms that need to be populated, this information is going to flow through and get these state forms created for us as well. So even if you're on a federal form, if the information can flow through into any of the states, going to be an automatic process. Now, there may be some instances where there is state-specific information that needs to be entered, and there'll be state worksheets very similar to what we're looking at to go ahead and do that. But by and large, a lot, I'd say the majority of the data is going to flow through from the federal side, really getting most of that state return done for us. For this presentation, I always focus on the federal side. as every state can have its own little unique things to it that may not be applicable to a lot of people here if I were to pick a specific state like Georgia, for example. But if you ever do have questions about it, there is going to be tax research built into the software that I will show off later on that can really help answer some of those state-specific questions. Now, one more thing to really go over on the W-2 is going to be the Box 12 codes. And the Box 12 code is going to cover things like healthcare, really employer provided healthcare, maybe 401ks, Roth IRAs, retirement plans. You know, the IRS still needs to know about those contributions because some of those may be taxable. A Roth IRA, those contributions that you make, they're not going to be deducted until deducted immediately. If it's traditional, yes, it may, but the tax software is going to know what to do exactly based off these deductions or based off the income codes that you can go and enter. And Double D is very, very common income code. I'll just say there's $1,000. When I enter in the information, you see the refund did not change, so it was not critical to the amount that's going to be owed as far as AGI. But you can add in as many of these as you are. It's not uncommon to see a few different items located here. But you can add in as many of these rows. Even if you need more than 4, you can get more than 4. These are really the critical items in getting a W-2 done, because you need the name, you need the wages, withholdings, any health care, any employer provided retirement plans, and the state information. I would say those are the common items that you're going to run into over and over and over again. There may be some more complicated things. You can see the box 14, there's a railroad and it's asking for it here. I have done thousands of tax returns. I can tell you personally, I've never ever entered in this box in any tax return. So if there is a lot of information and maybe you're newer to this and it seems overwhelming, just know that there are really the heavy hitters, the highlights that you're constantly going to be entering in over and over and over again. And you will get proficient at it very, very quickly. Now, the next item that I want to go over today, it's going to be something that I found a bit confusing when I was first becoming an accountant and just graduated college, is the 1099 miscellaneous versus the 1099 NEC. And sometimes you're going to see income that you're going to think, well, why isn't this a W-2? They were working for a company. They contracted themselves out. Why are they not getting a W-2? Well, this is all going to be reported a little bit differently to the IRS. And before we really jump into contract labor, I do want to go over the differences between the 1099 miscellaneous and the 1099 NEC. And starting off with the 1099 miscellaneous, this is going to be used in reporting of payments that are not subject to the self-employment tax. Think of rental income, think of prizes. Maybe they were on a game show, they won some money. Well, they're not an employee of the game show, but they're also not really working as a contract for the game show. They were just given money. And this is going to be taxed a bit differently. And self-employment tax can be a little bit tricky to wrap your head around. But basically, if you own a business and you are let's say the employer, the main employee, your taxes are going to be calculated a little bit different than, let's say, someone like myself who's a W-2 employee. And the 1099 miscellaneous is going to be for all of those items that are not subject to self-employment tax. They're not business related. When it comes to the 1099 NEC, well, this is going to be used for the reporting of non-employee compensation that is subject to that self-employment tax. And independent contractors are primarily who's going to receive these. Maybe they own a single member, or excuse me, a single member LLC, they have a sole proprietorship, just a little side business, it could even be a full-fledged business. But the main thing to note is that as they perform work for the company that they've been contracted by, they're not going to be an employee. Even though they're working and getting paid, they're not on the payroll of that company. They have just been contracted out. And why this is important and why this is not, they're not just given a W-2, is their self-employment taxes are going to be a little bit higher when it comes to the Medicare and the Medicaid section of that. But what's nice about the tax software is it's really just about mixing and matching the boxes. And you're really just looking and seeing, okay, what documentation has my customer given me, and then just finding the form, adding the form, and then mixing and matching those boxes. So if we go back into our tax software, let's see if I have a 1099 NEC. I don't have one in here yet. So let me go ahead and go to my add forms button. We'll type in 1099. Here it is right here, the non-employee compensation. And we're going to go ahead and attach this to his Schedule C. And when we do this, it's going to look very similar to the W-2. And this is one of the ways the IRS has really set up all of the federal forms that your customers are going to receive, is that on the left-hand side, it's going to be employer information, name, address, etc. Right-hand side, always going to be the financial situation that is being reported. And if we were to scroll down, this is really all there is to the NEC. It's just 7 boxes on the right-hand side, along with the basic information. And you can see, once again, the recipient, the taxpayer, their information automatically flowing through. We would just have to enter in the EIN, or if it's a social security number, and then the name of the company that is paying them. Once we do that, you're just going to match what you see on the documentation to what is in these boxes. I'm just going to say they had $10,000 and non-employee compensation. And look, we can see that the federal refund now has gone back to a balance due. Going to add in a bit of withholdings. Let's go ahead and just add in $2,000, not $20,000, $2,000 in withholdings. You can see we're now back to a refund amount right here. Moving forward, I'm not going to spend a ton of time on the 1099 NEC. Main thing really to know, just kind of recap, is there is a difference between the miscellaneous and the 1099 NEC. And the NEC is going to be for work that is performed, but you are not an employer of that company. 1099 miscellaneous is going to be for types of income that are not business related. It's going to be gifts and rental income, etc. Moving to our next topic here, I do want to go ahead and talk about some of the different schedules that are going to be within a 1040. And we're going to be going over A, B, C, and D today. And these 4 schedules are really the most common. Schedule E is where rental income, like maybe I own a second property and I'm renting it out to somebody, but I still own it. Schedule E is also common, but we'll be doing a tax school later on in the future, really going over the specifics of how to fill that out, as it can be very intricate. But today we're going to be doing more of a high-level overview. We're going to go over the Schedule A. And the Schedule A is where itemized deductions are going to be shown. And typically, this is the only one that's going to help your client on their taxable burdens. Sometimes the Schedule D may be helpful as well, but the Schedule A is really designed to help the taxpayer get their taxable income down. We'll be going over this in a little bit more detail in just a little bit longer in this presentation. We'll also be going over Schedule B, where interest and dividend income is reported. Schedule C is for those businesses that I've been talking about that are either sole proprietorships or single member LLCs. And then lastly, we'll take a quick look at the Schedule D, which is the capital gains and losses. And this is where financial transactions are going to occur. Let's say I went and bought a stock this year. I went and bought Amazon. And after it went up or it went down a little bit, doesn't really matter. I sell it. I will get from the broker a statement of all the transactions that I've had throughout the year, and I would report that on the Schedule D. We'll take a quick look at that as we go through this. But today we're going to start off with the Schedule B and the interest and dividend income. And I've gone and got another sample of a common 1099 that will be sent to your customers. You can see we have a Regions Bank, we have a payer's TIN, we have a recipient's name, and then our financial information, just like every other form, is going to be on the right-hand side. I think you're starting to see a trend that, once you get the hang of entering in one of these items, it's really not that complicated in order to get any of the other various 1099s input. And I'm going to go to our Schedule B, and let's see if I have it in here. As we scroll through the tree, I do. And click on the Schedule B. And we can see, okay, there's some seller finance mortgages, but more commonly, we're going to be looking at other interest. And let's say, for example, I went to a bank and I opened up a closed deposit and I deposited some money into that. And it's going to get interest at a certain percent, whether it's a monthly compounding or a yearly compounding, doesn't really matter. The bank is really going to take care of preparing the financial situation and getting the 1099 interest together. And then as a taxpayer, it's really just saying, okay, this is where it came from. Here is the amount. We can say there was $1,200. You could also add in withholdings if need be, but it's really just typing in these different boxes on where it came from, what the amounts are. When it comes to things like dividends, there might be a couple more intricate things with the dividends to really go and input, and we can go to the dividend statement right here. And when we go to the dividend statement, instead of looking at that summary view like we were with the interest, we're looking at a more detailed view. And if I were to hop back into my PowerPoint, I can go to the next 1099 that we have here. And just to go over the main boxes that I constantly see over and over again. So you're gonna see box 1A and 1B constantly filled out. And there may be some withholdings as well for the dividends. I think most people probably know what dividends are, but just in case you don't, some stocks that you may purchase may give out dividends on a quarterly or annual basis, just giving a little bit back of what that company made to the stockholder. And excuse me. And when that happens, that company will send that information to their financial broker. The broker will get the 1099 dividend statement put together, and they will send it to your customers. And like I was saying, the ordinary dividends, the qualified dividends, really the two heavy hitters that are always or most commonly input here. And if we were to go back into tax-wise, well, you can see I already have a payer ready to go. And while this may look a little bit different than some of the 1099 forms, it's really just going in a chronological, or maybe not chronological, a formatted order that's going to match the forms that we're getting from our clients. I could say there was $1,000 in ordinary dividends, there were 500 in qualified. This TSJ column, just so you know, stands for taxpayer, spouse, or joint. When completing a tax return, you can assign, okay, is this going to the taxpayer, is this going to their spouse, or is this joint income? This is income for both of them. This can be used to split up a tax return if you want to play around with married filing joint, married filing separate comparisons. Usually joint is going to give better taxable break to your customer, but there may be unique situations when filing separately is better. If you assign all of the information as you see it on the forms, this will really let you run a comparison if you just want to do a quick double check. For the dividend form, I'm really just going to focus on the ordinary and qualified dividends. That's what you're going to run into constantly over and over and over again. There may be some of these other sections though when you get dividend income done, but it's really just going to the boxes on our documentation and matching it up to where we input it into the tax software. And before I jump into a Schedule C and start talking about self-employment business income, there is one thing that I want to do. As we've been going through and entering in financial information into this return, if we actually go back to the Form 1040 and scroll down to the different income sections, look, you can see that the financial information that we're entering is automatically populating the Form 1040. We can see our wages that we input for the Burger Hut, shown right here. We can see the we can see the taxable interest. We can see the qualified divs, the ordinary divs located here. And it's just a little point that I want to make to you all is that as you fill out these worksheets, the actual form is going to be generated and populated based off what you put in these input worksheets that we've been looking at. So now that we've gone through that, let me take a quick sip of water here. Let us go and talk about the Schedule C. And let me see if I have a Schedule C in here. It looks like I do. And I'm going to click on the Schedule C. Going to see a bunch of red items. We're going to kind of gloss over those as it's mostly the same. You will see that the taxpayer address did not flow through. Reason for that being is that a business may have a different address than where the taxpayer is actually living. This is something to always double check with your customer to see, okay, are you running this business out of your home? Do you have a specific office or place of business, which would be more applicable to enter in this information? We're going to skip over this though for today's presentation. When it comes to the accounting method, you can see I've selected accrual-based method. But if they're using cash-based, you can always click this box. They may be using other. That's definitely very rare, though. Typically, people are using cash or accrual. I think accrual is definitely the more common of the two. Just saying when an expense has occurred, I will go ahead and when an expense has occurred, I will go ahead and input this into my books, where the cash method is really looking when items are paid. That's when it's going to be input into the books. Accrual is definitely the more common of the two. Always double check this with your client. They should hopefully have some sort of idea of what they're doing. Not all our clients always know, but getting this set up is going to be key, making sure that year over year these tax returns are reporting the correct period of information. Scrolling down, the first part of the Schedule C is going to be the income section. I've gone ahead and input just some gross receipts. This is typically going to be the sales that they've made, or the services that they've offered that they've been paid for, or at least performed the work for, that they're going to go ahead and report this to the IRS. If they are selling an actual product, there will be a place for the cost of goods sold. And this will be one of the first calculations, and trying to figure out what their net income is, what their gross profit is. And let's say I had a company and I was selling widgets. Widgets was always the keyword they used in college. They never gave you a real item that they were selling. It was always widgets. So I'm going to stick with that. And let's say I sold them for $10,000, and but they cost me $5,000 to either buy or produce. You're going to be able to deduct that cost of production, or cost of actually acquiring the merchandise. You're going to be able to deduct that from their sales in order to lower their taxable income and really paint a more accurate picture of what this company is making to the IRS. Now, if we continue to scroll down a bit further, the IRS, if you actually were to look at this form Schedule C, these are going to be the expense categories that are going to appear on that schedule. And you can see we have things like advertising, and I can go type directly into these fields. Maybe they had a radio ad or a billboard. I could go and say there was $2,000. Car and truck expense, there's a couple different ways you can do the car and truck expenses. You can go by the mile, you can go by the actual cost that you incurred. Maybe there are lots of repairs. Really up to you to determine what's going to be best for your client. Commissions and fees, contract labor, these are just, if we were to hire somebody, or you had specific fees for some of the merchandise that you were acquiring. Depletion and depreciation, if they have assets, assets, if I were to buy a truck, for example, and this was my work truck, or if I had a piece of equipment and this equipment produced the widgets that I'm selling, you can slowly depreciate the loss of value in that asset over a specified time period. And this can be very helpful because it's going to give your clients a steady expense that's going to lower their taxable income over time. And it also paints a very accurate financial picture. If you were to think of a car, for example, what you pay when you buy a car new is a lot different than what you could sell it for 10 years down the road, right? That's a depreciating asset. What you pay up front is always going to be more than what you're going to sell it for when you do dispose of it further on down the line. This is a way for them to slowly take that depreciation as they use the asset. It's going to lose some of its value very slowly over the years. Not going to go through each and every one of these items, as I think we're kind of painting a picture of what's being reported here. But these are really the key items that will be listed on the Schedule C. Now, what's important to note is there may be expenses that your clients have that are not one of these key items. There's really not a place to go ahead and input this onto the Schedule C. Well, what you can do is you can always go to the other expenses section, and we can see there's a section right here, other expenses from line 48, and you can input this information. Really, any expenses may or may not qualify. If it is a general test, if it is something that is, critical to them running the business, this is something that is in no way a personal expense, this is only occurring because they own this business, it's probably going to be deductible. The IRS is very, I don't know if lenient is the right word, but they're very flexible. I think that's a better word. They're very flexible in what you can report as a business expense. And this is really one of the areas where you can work with your clients to really maximize value to them. The more information they can give you, the more bank statements they can give you that are easily digestible, the more you're going to be able to deduct their expenses. I always recommend, if you have a client that has a small business, always have a separate bank account than their personal bank account. I promise you, if you have everything conglomerated into one area, you will lose information. It just won't make sense to you. You'll forget you paid it. But if you have a separate account that's only for business, you can merely make sure that you're getting each and every possible expense input, really lowering their taxable burden by as much as you possibly can. Trying to see how we're looking on time. Looks like we have about 20 minutes left here. So I'm going to go ahead and hop over to the Schedule D. And with the Schedule D, this is where capital gains and losses are going to occur. And like I was saying earlier, the example that I gave was stock sales. I bought a stock, I sold a stock, I either had a gain, I had a loss. That information goes here. It's not the only item. Really, any capital gain or loss can be reported here. But just for the purposes of this presentation, it's definitely the most common item. Very common for 401ks to invest in these sorts of items. Maybe they're doing it on the side. They just have some different items that they've bought throughout the years and they've sold them. Well, there's really going to be two sections when it comes to these financial transactions. There's going to be short-term and there's going to be long-term. And we can see the first section is part one, which we can see the short-term capital gains and losses. If we scroll down a bit further, we can see we have the long-term capital gains and losses, and it actually gives us the description, right? Held for more than 1 year. If we go back up, held for 1 year or less. And that really is the whole test between short-term and long-term, 365 days. If they had it 365 days or less, short-term. If they've had it for 365 days or more, long-term. Now, one place to not get tripped up with is, let's say they bought it in the middle of the year. Let's say they bought it in June of 2021 and they sold it in March of 2022. That is less than 365 days, even though it's spanning 2 different financial years, still going to be a short-term gain or loss. I think that's the really only little tricky thing that could possibly be brought up there. But when it comes to entering in this information, you're really going to have 2 options available to you. When you get capital gains and losses from a broker, for example, it will list out every single transaction that has occurred throughout that year, every stock, every sale, and so on and so forth. And it is not uncommon for there to be hundreds, if not thousands, of different transactions that may have occurred, especially with like high earner clients, right? And going through the process of inputting thousands or even hundreds of transactions one by one, that can be a lot of work. That can be a huge time sink that can really minimize your value, minimize how much you're making per return. Now, what the IRS has done, and this is a very good thing in my opinion, is they now allow you to just go ahead and report the macro numbers. And what I mean by macro numbers is there will be a section on that brokerage statement saying, here's all the short-term gains and losses. Here are all the long-term gains and losses. And you can just go ahead and type in those totals. Here are all the short-term, and I can go ahead and do this in the tax software. Here are all of the sales that occurred. This is what they originally paid, so they had a little bit of a profit. And what you can do is once you type in those macro numbers, just attach a PDF copy of the brokerage statement to the tax return. You can do this from the tax software itself. And the IRS will accept this. They're saying, okay, you've given us, you've reported it accurately on the Schedule D, and you've given us the detail that we can then go over, being the IRS. They can then go over and actually go through and comb through and make sure that it is correct if they do choose to go through it. There are other items that could be reported here as far as like sales of assets over time. Maybe you sold a house, maybe you sold a truck, a car, whatever it may be. But most of the time, the main thing is going to be those financial transactions, and you will get a brokerage statement from each and every broker. If they worked with Merrill Lynch and Ameritrade, they are going to get 2 different brokerage statements, I should say, and both of those will need to be reported on the Schedule D. Like everything, though, really the main takeaway is that you need to gather all of the information from your clients, and then it's just letting the tax software know what those items are, and it's going to do the calculations for you. Now, I know I've been throwing a lot of information at you, so what I'm going to go ahead and do is open this up to our next polling question, and I wanted to see what you all thought here. Are you allowed to file a tax return with estimated income values? And I've gone ahead and said yes, no, not sure. I know this can be a tricky one, so I'm going to try not to give the answer away before we go through this, but try to think of prior year returns and gathering knowledge in the prior years. Think of that, would that be difficult? And I think that's kind of a pretty good hint on what the answer is, but I want to see what you all think.
Answer's looking pretty split right now. But
Looking pretty split.
Yeah, let's give the poll just a few more seconds here and see if we
Sure,
can't get
absolutely.
All right, we can go ahead and wrap this up and we can see what everyone thinks.
Okay, what are the results?
So it looks like we've got 37% saying yes, 49% saying no, and 14 saying not sure.
Not sure. Okay, so the answer is going to be yes. You can file tax returns with estimates, but there's going to be some huge caveats with that. I don't recommend it. I definitely do not recommend it, as it's going to set off a lot of warnings to the IRS. You can even mark information within the tax software saying this is an estimate. And the reason that the IRS allows this, right? The IRS does not like this. But there may be certain situations where maybe you have someone who hasn't filed a tax return in 7 years, and you're trying to go back and recreate this data for seven years ago. It can be very, very tricky. It can be sometimes impossible, right? If there's not accurate record keeping, they most likely owe money, but they can't get a specific to the dollar amount as someone who was responsibly, filing their tax returns. Well, you can mark them as an estimate, and I typically only ever recommend doing this if it's a prior year return, because the IRS is still going to want their money, especially if it's an amount due. Even if you can't get the exact dollar, they want to collect as much as they can. Just know if you do send a return with estimates, it does need to be marked to the IRS. This is an estimated value, and it's going to probably increase the chances of them wanting to take a look at it, right? Just making sure that this was filed correctly. They don't want you to just estimate some huge deductions that make no sense, but it is a good thing to know. Moving past this, when it comes to the last schedule, I'm actually going to open this up to one more poll question here, and we're going to go over some of the final items. But I want to ask you all, is it better to take the standard or itemized deduction on a 1040 tax return? And I have 4 different options. We have standard deduction, itemized deduction, depends on the situation, or not sure. And we're going to take a quick look on the differences between the standard and itemized. We're going to talk about the benefits of each. And one of the things that I think you'll notice is it can be pretty easy to tell which deduction you're going to use for your client once you've done quite a few returns. So I'll give you all just a couple seconds, and then we'll go over the standard itemized deduction. We'll take a quick look at the Schedule A, and then a few tools to help you get through a tax return. Okay, we'll give you all just a couple more seconds here to input your answer.
Yeah, we'll keep them for a few more moments, but it does look like everyone has one answer in mind. We're going to go ahead and close that. 3, 2, 1. All right. So 87% with it depends on the situation.
And those 87% would be correct. It definitely depends on the situation. There are going to be specific reasons why to take both of the deductions. And just to briefly go over the differences between what a standard and itemized deduction is, the standard deduction is going to lower your taxable income by a fixed amount. And it's going to depend on a few things. It can change, but it really is going to be determined by what's your filing status. Are you single? Are you jointly filing? Are you the head of household? And how many dependents do you have? And you will get a set deduction for each one of those that you can add. For example, if it was me and then my spouse, and we had 2 kids, that would be 4 standard deductions, and there'll be a chart that'll tell you. Main thing you need to know while completing a tax return is just how many dependents they have and what's their filing status. This is another thing the tax software is going to do automatically for you. Now, when it comes to the itemized deduction, this is going to lower your taxable income based off what your specific expenses that occurred throughout the year. The main thing to know is that you have to pick one. You cannot take both. You cannot mix and match between the two. You have to take one of them. And you'll probably be able to tell pretty quickly what the better of the two is going to be, based off a few things like what's their net income. If they have a lot of different income brackets, they own businesses, they have a lot of medical bills. These are all things that could be itemized and deducted. If they're maybe a bit younger and they pretty much just have a W-2, they don't own any property, the standard is probably going to be the best for them. Now, one thing you're going to notice is a lot of your clients are just going to throw all of their expenses at you and probably just write them down and give you a bunch of receipts. That's very common. It happens to everyone, I promise. I always recommend, at least when it comes to some of those expenses, just have them give you an estimated number of what all those are. You can typically go through very quickly and figure out, okay, is this a standard deduction client? Is this an itemized deduction? They may give you 30 receipts that are $5 each, or maybe $50 each. And even though there's a lot of different receipts, the standard's probably going to be better in that situation. And to look at the standard deductions, you can see I have a listing here for the deductions, and you can see the differences for single, married, filing jointly, head of household. And you can see the 2022 amounts, I should say, which we just went over. But you can also see that that's going to slightly go up, and it's typically inflation adjusted, as it's going to go up a little bit each and every year. Now, when it comes to picking what you're going to do, you can always look at the standard, what they're going to get their standard deduction, and then you can always just kind of look at the expenses that they've given to you. And when you go through and see the expenses, well, for our example, if they're single and they're getting a $12,950 deduction, well, if they have $5,000 in itemized expenses, clearly the standard is going to be better. If they have we'll say $30,000 in itemized deductions, then you're going to want to go with the itemized. And the nice thing about itemized is if they do qualify, it is going to be more beneficial. There will be some guidelines set in place by the IRS to kind of limit it, but it can be much, much higher than the standard deduction, especially if they have a lot of expenses coming up. And where you're going to report itemized deduction items, let's go back into the tax software and let us go to the Schedule A. Let's see right here. This is where all of those itemized sections are going to be reported. We can see different areas. We have medical and dental expenses, taxes you paid. This is a very common one, state and local taxes. Well, this is going to be taxes that were paid to other states, whether they're income taxes, whether they're general sales taxes, they will be reported right here. As you go through, the tax software will actually go and select. Give me 1 second here. Okay, sorry about that. I had a whiny dog there that was trying to get out of the room. Apologize. So to finish this up, there will be different areas where we can see interest, and you have the home mortgage interest and points. This is definitely one of the more common items that you're going to see. All of that interest on the house that they own that's not going to their equity during their monthly payments, that's all going to be deductible. You'll get a 1098 showing that. And what you really want to make sure is you have a very complete assessment of their financial situation really before you even go into the Schedule A. The key here is to kind of get a very accurate, even if it's an estimated number, a pretty close estimate of what their total Schedule A deductions are going to be, and then comparing that to the standard. If you think this is going to say, if you can see that it's going to be quite a bit higher, or even a little bit higher, that's really when you're going to go through the Schedule A and go through and fill out each and one of these items, gifts to charities, for example. But if it's going to be lower than that standard, even if you fill out the Schedule A, the tax software is going to know that the standard deduction is better, and it's not going to take it. You can fill out each and every one of these items with different types of expenses, but if it's not going to be beneficial to your clients, the software will not do that for them. Now, one last item to go over today, as we've gone through really the key points of the 1040, is I want to talk about some of the tools that are going to be within the tax software to help you complete a return. Now, we've already talked about get the red out. That is the function, making sure that we input all of the critical information into the tax return. We're also going to have a couple different modes here. We have interview worksheet and interview mode. And lastly, then we'll talk about the diagnostic report. And what the difference between interview worksheet and interview mode is, I should first probably explain it. What we've been looking at today has been the worksheet view. And the worksheet view had, for example, if we want to input a W-2, well, we go to the W-2 worksheet, and we just input the boxes. But some people, especially newer people, may prefer to use one of the different views. We do have one called Switch to Interview, which is located up top here in the top left-hand corner. This is going to completely change our user interface. And instead of going worksheet by worksheet and looking at the main information worksheet, looking at the W-2s, this will walk us through step by step how to get through a tax return. And we can see it starting off with the basics. What's their filing status? If we were to click on one of these, let's go click on personal info. You can see it's looking for their name, what their birth date was, what's their social, and it's going through step by step how to get a return done. And this can be very good for someone who's newer at doing tax returns. And what's important to note is that even though our entire interface has changed, it's still going to generate the worksheets. If we were to go to income and input wages, it's still going to make a W-2 input worksheet for us. It's just going to take the information on this mode and have it flow through. And it's also going to flow through into the tax return. This is definitely the most handheld. This is the option that will hold your hand the most while getting a tax return done. There is going to be one other view though, that's kind of an in-between between the worksheet view and the interview mode. It's going to be the interview worksheet. And I've actually gone and put this into the tax return right here. We'll go ahead and click on it. And it's going to have a bunch of bubbles. It's really a checklist of saying, okay, what types of income did they have? You can see that most of these are no, but if we continue to scroll down, there's some other options just asking us for specific forms. Well, if we start clicking yes to these items, you can see on our tree on the left-hand side, it's automatically creating these worksheets for us. And you can use this to kind of look at their organizer, look at the financial information they have, and go ahead and check yes to the boxes. You'll know exactly what you need to complete in order to get their tax return done. Last item to go over is going to be the diagnostic report. This is going to be kind of a catch-all fail-safe, making sure that you're not missing any critical information within the return. When I click the diagnostic button, you can see all of these red items that are on the left-hand side. Well, they're being summarized in a listing for us where it's showing them all kind of side by side what's wrong with each one of these forms. And if we scroll down, anything that's a red hair, this is something that's definitely going to get the tax return rejected by the IRS. If we continue to scroll down though, you can see that there's a warning. Warnings are items that probably need to be fixed, but may be correct the way as is. You can still file a return with the warning diagnostic, but it's really on a per case basis. You really need to use your own professional judgment on if it's correct as is or if it does need a change. And then if you have any overridden entries or estimated entries, it will also show up here as well. And the last real little tool to go over is if there is a diagnostic within here, you can always click on the specific diagnostic. It's going to bring you back to the worksheet where you need to input the information. And then you're really just looking for the red items to clear those up. Once you clear up those red items, it'll remove the diagnostic. Once all the error diagnostics are cleared up, and you've also reviewed all the warning diagnostics, the return will most likely be ready to be e-filed. So with all that being said, we went right at time today. I'm going to go ahead and conclude this presentation, but before I do, I want to ask you all one final polling question. It's the polling question we always ask at the end of these tax schools is, would you like a more in-depth product demo and further details about TaxWise Online? We have three options. We have yes, no, and I'm already using TaxWise Online. We'll give you just a little bit of time to go ahead and fill this out. I would like to say in about 3 weeks, I will be hosting another one of these tax schools. It'll be on income splitting, which is a very advanced topic on how to minimize taxable burdens for businesses versus sole proprietorships. If you are interested in that, please go ahead and sign up. I'll give you just a little bit of time to answer this polling question, and then we will be shutting down this presentation. Thank you very much.
Give everyone just a few more moments to answer the polling question. All right, we're going to go ahead and close this out and say thank you for your time. So thanks everyone for joining us. And as Ryan said, we'll have another topic here in a few weeks on income splitting. Definitely be sure to join that virtual tax webinar. It's going to be a great one. And we hope you enjoyed today.
Thank you, everybody. Have a great rest of your day.